So in this session, we are going to discuss market structure, the types of market structure. So we've covered month one, and now we are in month two. And under month two, we already covered price action. But I want to tell you that everything that we will discuss further is under price action. Market structure is under price action. Technical analysis is under price action. The price action is all about the entire behavior of the market, right? And this market structure is just a particular behavior that you are looking at, right? You're looking at when price is moving from the downside to the upside or from the upside to the downside. Is a particular behavior under price action, right? So guys, let's get to the chart. So before we look at the context that reviews market structure, let us look at the three types of market structure. Number one, we have external market structure, external market structure, market structure. Then number two, we have internal market structure. Then we have ranging market. Okay, these are the three types of market structure, right? So I'm gonna sketch them here, and also I'm gonna show you on chart, right? So let's look at how markets behave in an uptrend and how it behave in a downtrend. So if market is moving from point A to point B, this is exactly how the pattern formed, right? Going up, creating zigzag like this. So this is exactly how markets move if price is moving from the downside to the upside. Okay, so this is how markets move from upside to the downside, creating zigzag, zigzag continuously, right? Until it is time for market to change direction from downside to the upside or from upside to the downside. Okay, now this is a ranging market. It is when the direction is not clear. Market is moving sideways, right? Sideways, sideways. So this is a ranging market. You can see that the direction is not clear, right? So in this condition, we can say that market is consolidating, right? Then in an uptrend, we can say market is creating expansion, reversal, retracement, or expansion. Also in the downtrend, we can say market is creating, reversal, expansion, reversal, continuation, or retracement, reversal. So this is exactly how markets move from one point to another, right? So now there is something that most traders don't really understand. This zigzag that you are seeing here, if you go to the chart, this is not how you see. It's somehow a little bit dynamic. Why? Because we have internal structure and we have external structure. So basically this chart that I draw here is external structure. So what is internal structure? Internal structure are the patterns or the behavior that happens within an expansion. Yeah, these are behavior that happens within an expansion or within a reversal or within a retracement. Okay, for example, we have this bullish trend, right? Market moving from down to up, right? So sometimes market don't just move expanding plainly like this, right? It might be moving like this, somehow random, right? But still we can see the objective very clear, but it looks random. Why? Because when market is trying to move from down to up, it's creating both external structure and internal structure. All right. So we can see from this point here to this point, and then this point, okay, then this point again, and this point, then this point. So this point that you are seeing is what we call external market structure, right? So any swing, high or low, that we see within this range, like this one, right? And then this one. So these are internal structure. If you look at what happened or the behavior of the market from this high down to this low, we have internal market structure, right? Then the same thing here. Look at this reversal, right? So from this range, this particular point here to this particular point. Oh, remember I said I'm not going to use point, but the reason why I'm using point here, because I want to explain the context differently. But I want you to first of all understand the types of market structure. So that is why I'm still using points. So when we get to the context, why markets move from this particular point here to this point here, then you'll be able to understand it much more better. But if I start using the terminology that defines the context, you might find it a little bit confusing, right? So now this is internal structure. So let me give you another example. Market moving from the downside to the upside, but before going up again, we have this internal structure. Then it expand to the upside again, then expand to the downside. Then before going up again, we have another internal structure like this. Then we expand to the downside like this. Okay, expand to the upside like this. So depending on the volatility of the market, but when you look at this, you can see that we have our external structure here, this point here to this point here. Then we have internal structure, which is this one. Let me use my trend line. Okay, this is our external market structure, right? This is our external market structure, right? Then this is our internal market structure, right? Internal, right? This is our internal market structure. Okay, can you see it clearly now? This is our internal market structure. Okay, so you can see it now, right? You can see within this big zigzag, we have minor or small zigzag, right? When price expand, then during the reversal, there was another, right, zigzag. So market basically formed another structure while the price was trying to reverse from this point here down to this point. There was another market structure. Then after that, price expand to the upside. Let us see our external and internal market structure on charts, okay? So that it will be more clearer to you, right? So look at this chart very clear. Look at it very clear. Pay attention here. Can you see when this price was coming down, we have this point here, then we have this point here, then this point, right? Then we have this point, then we have this point, then this point. Be patient. I want to explain to you so that you understand. Then we have this point, then we have this point, right? Then we have this point, then we have this point, right? So this is our external market structure. Let me use zigzag from this point here to this point to this point here to this point to this point here, then this point, this point, this point, this point, then the last point. All right, then the last point downside here. So this is our external market structure, right? So when you look at it very well, before price moved from this point here to this point here, there was another zigzag. So that is what we call internal market structure. Okay, that is what we call internal market structure, right? So this is another zigzag, price forming another structure inside a bigger structure, right? So when we look at it, when price was moving from this point here down to this point, there was another zigzag, price moving, you know, like this, then to this point. So this is our internal market structure, and this bigger structure is our external market structure. I hope you understand this now. So let's look at the same example in an uptrend. So when you look at this structure, right, you can see that market is moving from downside to the upside. Look at it. This is the first point before market started going up. This is the first point, right? Look at it. Then this is the second point before market started going up. We have another point here. We have another point here. Then another point here. I like to make my video very detailed, so it might be long, but believe me, when you spend time to watch it, you really understand much more better. I don't want to just make everything brief, you know, and now you start, getting confused. So I would like to make my video very, very detailed, like I'm teaching a nursery school student. All right. So can you see? Can you see? All right. Can you see? So all these points that are marked now is our external, right, market structure, right? Let me use zigzag path line. We call it path line, not zigzag. Okay. So from this point to this point to this point, then expand to this point, and expand to this point, then come down here again, right? So then it expand to this point, come down here, expand here, come down here, expand here continuously. So when you look at this, you can see that we still have internal structure inside our external structure, right? So look at another structure, right? From this point here to this point here to this point here to this point here. Can you see it? This is our internal structure. This is our internal structure. Okay, this is our internal structure. So now, why do we have this structure? The reason why is because market cannot just move from point A to point B like this continuously. So before market can actually move from point A to point B, it must pull back. It must pull back, right? Before it will continue to move. Expand to the upside, it must pull back like this before it will continue to move. It must pull back before it continue to move. It must pull back before it continue to move. In both bullish and bearish trend. Okay, this is a bearish trend. Expand to the downside, pull back before expanding again, pull back before expanding again. pull back before expanding again. So those pullback are very, very important, right? Those pullback are very, very important. So if market is not ready to create this pullback, then it will start moving sideways. So that is what we call indecision, right? When price is moving sideways like this, there's an indecision. The buyers and sellers are not ready to make decision, right? So that's why market moves sideways like this. So when we are in an uptrend, market creates higher high, higher lows. This point is now our higher high, right? And then this point is our higher low, right? Higher low, higher low, right? So this is how market move. Or if we are in an uptrend, market create higher high, higher low. So higher high, higher low, higher high, higher low, right? And if we are in a downtrend or market is expanding to the downside, market creates lower highs, lower low, right? Lower highs, lower lower highs, highs. Then here we have lower low, lower low. So this is exactly what market is trying to make us understand. It tried to make us know that okay, I'm about to go up, and before I go up, I will need a higher high and a higher low. If not, I'll not be able to go up. So basically, this is the message that the market is giving you as a trader. So anytime you have a higher high, so for that price to move from higher high, then create another higher high, it must create a higher low. So if market cannot create a higher low, that means we will not be able to get the next higher high, which is this point here. And if market create lower high here, so before market continue to go down, it must create a lower low. And after that lower low, it will not be able to continue to go down until we have another lower high again, which is this point here. So let's go to chart and let me show you. So this tells you that we can have external higher highs, higher lows, and internal higher highs and higher lows. Let me show you this bullish trend example. So when we are looking at the external structure of the market, this is our higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, right? Continuously. And when we are looking at the internal structure, while we are in an uptrend, we have this higher high, higher low, higher high, higher low, higher high, higher low. So this is how markets move continuously until it is time for the structure to shift from either bearish to bullish. We're gonna stop here and continue in the next session.